There was sharply different investor sentiment on either side of the Atlantic overnight. Looking at the US first, there is fading confidence that the US Federal Reserve will intervene in the US economy by pumping in additional economic stimulus. The reason is that the US Federal Reserve appears to be dropping hints that they believe that the potential growth in the US economy effectively outweighs the ongoing worries about the European debt crisis. In talking about the European debt crisis, European investors seem to be much more optimistic that measures will be undertaken which will effectively remedy that ongoing situation. The primary driver behind this was a typically schizophrenic by the German government overnight, whereby they indicated that they would consider providing some concessions to the Greeks in terms of their bailout, as long as the Greek government effectively showed some willingness to meet the underlying requirements for that bailout. Now, interestingly also, the Greeks provided a budget overnight which showed that over the next 2 years they intend to cut around 13.5 billion euros of government spending. That's about 2 billion euros more than was expected. So looking at markets, the Dow was off around 68 points in sharp contrast to European indices which were in general up more than 0.5%. In terms of currency, the euro rallied, and in terms of the Kiwi was up against the US but down against European currencies. Recently, the United Nations Food and Agricultural Organization released its updated World Food Price Index. Now, the World Food Price Index effectively tracks the international price of a range of food commodities, including grains, dairy, meat, and also sugar. In terms of the month-on-month increase, it's around 6% between June and July of 2012. The primary driver behind it was an increase in the price of those grains. Effectively, corn was up around 23%, primarily driven by the ongoing drought in the US. Wheat prices are also up, however, around 19% month on month, driven by expectations of a worse than expected harvest out of the Russian Federation. Interestingly also, sugar was a primary driver behind the increase. Effectively, this is driven by unseasonal rains in Brazil, which are hampering the sugarcane harvest. There's also some concerns about El Niño and drought in Australia, as well as the delay of the monsoon rains in India. Viewers will note then that one of the primary drivers behind world commodity food prices is in fact climate, and climate is obviously something that's out of farmers' hands. And talking of climate, given the rains that we've been having over the last couple of weeks, most New Zealand farmers will be hoping we haven't used up our entire season's quota before we even get to spring.